Hello and welcome. I'm Market Technician and this video is part of the TFT Institute's free trading course. Today, we will discuss about the Philippine stock market basics, how to earn. Before we start, please don't forget to like the video and subscribe to this channel. It will be much appreciated if you do. Let's get started. Stock market is a place where shares of stocks are publicly bought and sold. If you want to invest in the stock market, you have to call a stockbroker to assist you. Today, the transactions are provided by an online stockbroker at the comfort of your seat at home. We often hear the word stock. A stock, also called shares or shares of stock, represents an ownership of a corporation. By buying a stock, you are also buying a fraction of ownership of a corporation. A company can raise funds through selling of bonds, owing from investors and banks, and through an initial public offering or IPO. When a company undergoes an IPO, it intends to sell stocks of the company to the public. The proceeds from the IPO can then be used for the company's expansion, payment of debts, and other projects. Investors are buying the stocks hoping that the value will appreciate, or receive portions of the company's income through dividends. An owner of a stock, called a shareholder, is entitled to dividends of the corporation, nor the right to vote during shareholders' meeting. Dividends are received in proportion to the amount of stocks the shareholder holds. More shares mean more dividends. Take a time to check the illustration. A stock's price fluctuates over time. It is affected by factors that may affect the company's earnings. Factors include positive catalysts like new products, economic boom, expansion, etc., and negative catalysts like regulations, lawsuits, economic bust, pandemic, etc. In this chart, we can see how different events affected the price of the stock. The Philippine Stock Exchange is located at BGC Taguig City. The exchange was formed from the merger of Manila Stock Exchange and Makati Stock Exchange in 1992. Manila Stock Exchange, being the first, was founded on August 9, 1927. Makati Stock Exchange was founded May 27, 1963. In this chart, we can see how the Philippine stock market performed over the years, from 1985 to 2021. There are periods where the market is going up, called bull markets, and periods of going down called bear markets. The direction is generally influenced by the Philippine economy and global events. The main reason why we should invest in the Philippine stock market is to fight the effects of inflation. Inflation refers to the rise in the prices of goods and services. It includes food, transportation, clothing, housing, etc. On an average, the purchasing power of peso diminishes at 3.01% per year, based on the 10-year average from 2010 to 2019. The table shows the annual inflation rate from 2010 to 2019 at 3.01% 10-year average. Historically, the inflation rate is 8.18% from 1958 to 2021, reaching an all-time high of 62.8% in September 1984. The rate is affected by economic events such as the rising cost of oil and fiscal policies. This means that the average inflation may vary. As an effect of inflation, the 100,000 pesos from 2020 may depreciate its purchasing value. The table shows that at 3.01%, the actual purchasing power is diminished by 26.33% in 10 years. It is not advised to save your money in banks, as inflation will only depreciate its value. In this table, we can see how banks' 1% interest per year is only diminished by inflation. You may gain more than 10,000 pesos in cash in the next 10 years, but its actual value is actually depreciated by 26%. Save your money for emergency and immediate needs, but moreover, invest. Your goal must be to beat inflation and to grow your money. But which investment is the best? We can know which one is the best by comparing the annual inflation rate versus various investment vehicles, stocks, government bonds and MP2. In this table, we can clearly see that the stock market still beats the others. Take time to check the table. Take note that the data shown is based before the pandemic, as we are now in an abnormal event. There are two ways to earn in the stock market: through capital gains and through dividends. Capital gains is when the value of the stock appreciates. Dividends, as discussed before, is when the company distributes the earnings to the shareholders. But let's focus on capital gains. Let's use Ayala Corporation as an example. If we bought on the first trading day of 2008 and held the stock for 10 years, selling it on 2018, we could have gained 157% profit. We will use a B Capital Securities trading calculator to calculate the profits we could have gained. If we invested around 97,000 pesos from January 2008, we could have gained more than 153,000 pesos in 10 years. That's around 15% per year in 10 years. 157.73% profit. We beat the 3.01% inflation, did we? The same percentage profit goes even though one has smaller investment. Note that the same 157.73% gain is received by someone who invested around 46,000 pesos. The stock market equally multiplies the money invested regardless of how much one can afford. One can be on the right or wrong time in buying or selling a stock. In this example, Double Dragon Corporation shows extreme volatility in price. One could have gained up to 3,852% if bought on its IPO and sold to its all-time high. Or lose 87% if mistakenly bought 80 pesos and held as of July 23, 2021. If someone lucky held from IPO of 2 pesos and sold at 80 pesos high, he could have profited a whopping 3,852%. A 50,000 pesos investment could have turned to almost 2 million pesos. That's the power of buying and selling at the perfect time. But what if somebody did the opposite, who bought on 80 pesos high and held until July 23, 2021? We can see in the calculator that the 96,000 pesos could have turned into 12,000 pesos. That's 87% loss. We can learn here that there is a right time to buy and sell the stock. What do we need to know? There are two distinct studies in the stock market that an investor must study in order to profit. Fundamental analysis tells us what stocks to buy, while technical analysis tells us when to buy and when to sell. Fundamental analysis focuses on the company's market value through its financial data. A fundamental analyst may use the company's financial reports and look for disclosures such as future projects and plans. Through this study, one may determine the fair value of the company, whether the company is currently expensive or undervalued. On the other hand, technical analysis is the study of the price movement based on patterns in historical price data. A technical analyst, or technician, uses price charts, price indicators, price patterns, and the volume to determine the supply and demand, profiting from short-term price fluctuations and trends. Ultimately, a technician's goal is to determine the beginning of the trend and profit from it. The picture shows a price chart with technical indicators. How do we begin our journey in the Philippine stock market? Here are some practical tips. First, attend seminars and trainings if you want to learn from people who are already in the field. Learn as much as you can. Then you may need to open an account with a broker. Google some of the best online brokers available in the Philippines and visit their website for instructions in opening an account. One may open an account for as low as 1,000 pesos in some brokers. Fund your account. It is advised that even one can open a small amount. Start with at least 10,000 pesos to gain significant amount of profit. Finding a mentor may help speed up the learning process, so look for one. And finally, take an action but be careful. Always start small, and never test the waters with both feet. If you find this video helpful, please like and subscribe.